My name is Chris Wang. I graduated from Carnegie Mellon with a computer science degree. And after I graduated, I worked for at Google for a couple of years. Then I started a few companies. I eventually ended up with Playdom and so to Disney for a lot of money. And after that, I worked as a VP of engineering at Disney. Then I decided to retire. While I retire, I also decided to do some angel investing and look for the next opportunity. And recently, I started Syndico, which is a public blockchain. Phil, would you like
Thank
to give
you,
an introduction?
Chris. Yeah, I'll give a quick introduction. I would say I'm a mix between an entrepreneur and a venture investor. Started my career, started my first company as started an ebook company. That ebook eventually became the Barnes and Noble Nook, the first Nook that they sold. I quickly joined HTC. I built the first Android phones. And I would say starting from 2010, I started, becoming more and more of a investor. I started a corporate venture office at HTC. We did deals like Beats and SoundHound, and then later I started a VR AR fund called Presence Capital. I later joined Horizons Ventures in Hong Kong, which is Li Ka-shing's venture office. I led all the DTech deals, a lot of AI deals, and some crypto too. And then most recently, I started Race Capital with three other partners, Edith, Chris, and Alfred. So thank you, Chris, for doing this session. You have, for people I know, the perfect kind of, especially for Asian people, the perfect Asian kind of background with like you got a PhD as so early, and I think one question I have is, how do you're known for one of the youngest people to get a PhD, I think at Carnegie Mellon, right? Mm-hmm. How did you go from that to becoming an entrepreneur? How did you not just go directly into deeper into academia, basically?
Yeah. So while I was a researcher at Carnegie Mellon, I realized I actually didn't like research that much. I really want to do something that's much more practical. And that's when I decided, I really want to go to industry and I want to do something that's meaningful. And while I was working at Google, well, it's very interesting, but I decided to be an entrepreneur because I decided to become an entrepreneur because at that time, Facebook and MySpace are opening up their platform. And I feel that this is, a great opportunity to acquire lots of users very quickly. And I start to look for idea to capitalize on this opportunity. So when I decide
go ahead.
Yeah. So when I decide what to work on, I try to ask myself, why now? And the reason is because I think there are many, many smart entrepreneurs and there's a lot of smart people. And so if an idea could have been done before, it would have been done already. So if we don't see an idea, that's probably because it's not because no one has tried it. It's most likely because, if it could be done before, then it's probably most likely because someone has tried it and failed. And then so when I try to do something, I always want to ask myself why this hasn't been done before and why it couldn't be done before.
And so you were thinking of these questions when you were at Google. What did you do at Google, and what led you to, coming up with this Playdom idea?
I see. So I was doing local search at Google. So when you actually go to Google search, you might decide to say, hey, pizza near San Francisco. And the little map you see, and that's what I did at Google. It's basically try to integrate local or visitor search result into a main search page.
Mm-hmm. I see. And so how did that lead to your, thinking more about Facebook and MySpace and, the whole social gaming?
So I have always been looking for opportunity to start a company while I was working at Google. And it's just that when the Facebook and MySpace open up their platform to developer, I noticed, hey, this is the perfect opportunity to jump in.
Mm-hmm. And so you were thinking more of doing your own startup because, that was just something coming from yourself, or were you because everybody around you were doing startups? Was it like everybody at Google was thinking, that 80-20 or 70-30 rule. What was it in that environment that, or did you already have that when you were, studying at Berkeley or Carnegie Mellon? Like, did you already have that startup in you, or were you kind of inspired by the environment
Yeah.
when you were at Google? Yeah.
Yeah. So when I was at Berkeley, I have been thinking about starting company, but I didn't actually have the resource to do it at that time. And when I work at Google in Mountain View, I mean, right in the middle of Silicon Valley, and when I play board games with my friends, a lot of people we just, hey, we just chat about, hey, we should start a company someday. These are good idea and so on. And I think the Silicon Valley environment really help, because when I hang out with other engineer friends, we just constantly talk about, hey, what's the next opportunity? What should we do next, etc.
I see. And so it's in those conversations and that you came up with the idea of Plato.
So that's actually not where I came out with Playdom. So it's from those conversations that I realized that I want to do a startup. And when I start a company, I only know that I want to do something with the fact that Facebook and MySpace are opening up this platform to developer. I actually wasn't particularly attached to Playdom or the gaming idea at that time.
I see. So I would say that Facebook, in that sense, Facebook and MySpace did a great job in communicating with developers, right? They did a good job in saying, hey, this is a platform that we have, and we have all these users. And because as a platform, right, one of the most important things is being able to get a lot of developers, right?
Mm-hmm.
I think we'll talk about this later with, with all the crypto networks and public blockchains, right? One of the biggest, most important things is about how do we get more developers on our platform, right? I guess one of my questions I have is, you talk about Facebook and MySpace a lot, opening up their platforms to developers. I would say that, especially during that time, this is about 2007, 2006, maybe
2008.
2008. Yeah, I would say, wow, in that sense, they did a good job in communicating to developers and getting developers excited about their platform, and hence, being able to get more and more applications onto their platform. Yeah. Can you share maybe some ideas about how you, how they were able to communicate to developers like you, right? And the attractiveness of their open platform for third-party developers.
So so when they first opened up, I went to Facebook platform, actually not because of Facebook's pitch, but because I have some developer friend that work on their platform and get lots of users, made a lot of money. And it's the fact that there's a success story around me that drive me to that platform.
I see. And was your friend also building a casual game as well?
They were just building simple poking app. It's like you could send,
poker apps,
icon and so on to your
poking
friends on Facebook.
Yeah, I see. Okay.
Yeah.
And so it's just yeah, go ahead.
Yeah, and I think this type of success story really drive other developers to use the platform. And we are seeing the same thing on crypto too. If you look at the crypto space, there are a lot of successful DeFi application. Just, people are building Uniswap, people are building Aave. So people could have always built this crypto application a long time. For at least the last couple of years. If you look at Uniswap, it actually has been around for more than 2 years. But it only start to attract lots of developer when it gets very popular, when it made a lot of money in last year. And I actually think it's not that the open platform that drive the developer to the platform, but the fact that people can make money and some other people are making a lot of money is driving the developer to the platform.
Yeah. I remember when I first met you, I think it was around 2010, right?
Yes.
Or 2011 in the Playdom office. And I think one of the most interesting things I remember learning from you was this, this idea of, experimenting with ideas, and testing it very quickly. I think a lot of people, especially people have a lot of, I don't want to say misconception, but people have this idea that, great entrepreneurs always have this amazing grand vision. And then they just go out into the kind of open and start building it. But what I remember, stepping into your office, I just saw like, it's not that you didn't have a vision. It's just that you had many visions or many ideas, and you were very, quote, scientific about it. You would test this idea and to see if it worked, if it got traction, right? And you would iterate and test, and this constant beta, of course, was an ethos, and a dominant culture in Silicon Valley, right? Mm-hmm. And kind of maybe talk a little bit about that, how you came to becoming very experimental with ideas, experimental with startups, that mindset and culture, right? Yeah, kind of talk about that, that whole ethos.
Yeah. So at that time, I mean, when we first met, we are building games, and a lot of time we realized that it's actually very difficult to predict which game will hit. So rather than try to predict it, we become very, very data driven. What happens is that we'll have a gaming idea, but before we even build a game, we want to know, hey, would lots of people be interested in this game, or will there be a lot of people who want to play this game? So what we do first is we'll just run an ad to test, hey, can we acquire user cheaply? And we also will know how much it will cost to acquire each user. And this will become very, very important later in the game design, when we need to make sure we can design a game that can have some way to make more money than the cost to acquire the user. And the other thing we do is we also want to know how big is the market size. And at that time on Facebook, you could already run ads targeting particular city. So we could actually run ads against a few cities and just project out to say, hey, what's the total market size in the US? And this is all before we start building game. We just run ads, we figure out how popular it could be and how much it will cost. And when people click on that, it just goes to a survey. It asks people if they'll be interested in this game. Now, if a game passed the ad test, that's when we will start actually build a game. And when we build a game, we will actually just only be very simple. We will only build roughly first week of content, so that we can get people to come here to see if people come back every day, people like it, and so on. And when we build a game, a lot of feature will be, like a lot of times when we have many different features, we will just have the button, and when people click on, it will say, hey, it will be done, in the near future, etc. But we will end up only building a feature that a lot of people click on. So we could also test, hey, what to build next. So basically, from the initial very rough version of the game, we could know that if people stay around, if people pay money, etc., and what feature people are interested in. And if this is performing well, that's when we actually start to build out the full game. And so it's very much data driven. It's a lot of A/B testing. And one thing we really realized is that, so we actually try to test, hey, if a new college graduate versus experiment game designer, if people could come up with good feature, and we realized that people are just very bad at coming up with good feature or to predict what the user actually like.
I remember, when I saw that, I was very, it was very interesting for me to see, this type of innovation, right? Like, one thing I like to say is, I'm not religious about my idea. I'm just religious about having a market for your idea, right? Yeah. And I really saw that about, the way you were innovating.
I mean, let me talk a little more about that too. So I really like your statement about religious about the market, but not about any particular idea. So when I first entered the social gaming space, I actually wasn't planning to do gaming initially. I just want to do something on the social network. And the reason is because I see that, hey, right now there's a very good way to acquire lots of users very quickly, because this social network are opening up their platform. And I would want to say, hey, what kind of application can I build that will utilize this? And so when I first started, I actually tried an e-commerce site. Basically, people could recommend product to their friend and get a cut of the money. But then we quickly realized that people don't actually want to, push lots of product to their friends. And then so we say, okay, maybe let's try something else. And the next thing we try, just say, hey, maybe we should try something that's much more viral. So I built a simple app called URQ. And all this app does is it ranks you among your friends how cute you are. And to do that, we ask you, every time you come into this page, we ask you, hey, you have to tell 20 friends they are IQ first before we will reveal you your rank among your friends. And that turned out to be extremely viral. The app grew to over 1 million daily active users within 2 weeks. But afterward, people don't come back anymore because, I mean, once they realize how cute they are, they never need to come back to our application. And after this, that's when we think, we should try something not only viral, but also retain user. And that's when we try gaming.
Yeah.
And throughout this experience, I mean, I wasn't attached to any particular idea initially. I just know that, hey, there's a paradigm shift right now. Right now, there's social network opening up the platform. It's a great opportunity to jump in. And there's a lot of new ideas that couldn't be done before. Let's try a few things. And I think this applies to crypto space now too. If you look at the crypto space now, I think blockchain is actually a great new technology. It makes a lot of ideas that wasn't possible now. And there's just a lot of money coming into DeFi. So I think there's also a great opportunity here too.
Yeah, so just to close the loop on Playdom is, so was like your top game was I think a poker app, and then like can you name some of the top games, and was your method of testing, iterating, was that the method that you discovered for the top games that did really well, and was that or was it the engagement in those games that got Disney interested in Playdom?
I see. So some of our top games, so we have a poker app that's very popular, and that just stay popular throughout the entire history. Poker is kind of a nice thing where it doesn't decay over time as much compared to other games. The other thing, we have a Mobster game. It's like a mafia RPG type game, and that's making a lot of money. It's very high revenue per user. And the other game we have is called Gardens of Time. It's a hidden object game that's very popular, but it doesn't make a lot of money per user.
Yeah.
And
so seeing some of the top games you see, back then versus seeing, I don't know, the top games you see right now, like, is there anything surprising about the gaming industry right now? Like what's being, the high user engagement, like what are you seeing in the gaming industry now?
For the gaming industry, I see it's getting much more casual. Right now, a lot of people play on the mobile game, and a lot of games need to design this so that, hey, it's suitable for, people play a couple minutes at a time, maybe 10 minutes at a time. It's very different now compared to back then when people are playing games on desktop. People are willing to play for much longer and so on.
Yeah,
and right now, as the game become more casual, I also see more people playing the game, especially much more women are involving in playing games nowadays compared to before.
Yeah. And so can you kind of describe the process of, how Disney discovered you, and then pre-acquisition, the reason you decided to sell, post-acquisition, like kind of give a little background on that?
I see. So Disney discovered us partly because we had this poker game and we collaborate with ESPN to do a poker game together, and that's making a lot of money. And Disney own a decent portion of ESPN, and that's how they know about us. And when we talk to Disney, the Disney acquired us mostly because we believe that together we could produce something much more valuable. Like we know how to produce game well, and Disney has a lot of good IP. So if we could just use Disney IP in the game, then we could produce, it will be better for both of us. It's like 1 + 1 = 3. And that's why Disney acquired us, and that's why we also sell to Disney.
I see. Okay. And so after that, you stayed at Disney for a bit, and then after leaving, you started angel investing, correct?
Yes. Mm-hmm.
And I mean, when you, as an angel investor, was it the same kind of testing, iterate, repeat, data-driven kind of entrepreneurs that you looked for when you invested?
Yeah, I mean, I would look for that. I really care about a team. So I actually think for founder with past success, that's a huge plus to me. I also want to look for the chemistry between the founder and just their belief, like they're willing to, data-driven, they test a lot, etc. And the other thing I also look for is, I mean, just the why now. It's important for them to be in a for idea to be, I mean, it couldn't be done before, and I really care about that too.
Yeah. Okay. Yeah, I mean, for me, it's a different type of entrepreneur, like to be able to target a marketplace right now, grow it, test it, iterate, versus, the more visionaries that, I don't know, I think about, I imagine like, wanting to change the way we eat, like all the synthetic biology companies right now, the deep tech, you know, it's very hard to test kind of the market a bit. And so, yeah, I think I often struggle, even or as an investor, I look for different types of entrepreneurs and investors um, that look to test and be more experimental. But there are other type of entrepreneurs that just don't test at all, and it's just their intuition, and then they're able to convince investors and users. Yeah, I just see that as different types of entrepreneur, different type of one. Do you see that as well?
Yeah, I mean, I sometimes see founders spend a lot of effort, building their product, truly believe that, hey, this is the problem I want to solve. I'm just going to invest the resource, the time, and to build the technology to solve the problem. And generally, I actually avoid that type of entrepreneur, at least for angel investment. I much rather prefer people who just test the market immediately to see if it works. And once there's a product market fit, they will go back to complete the product. And yeah.
Yeah. I would argue that, I want to ask you, of course, we're going to jump into crypto now, and of course, the new opportunities in 2021. I think we're both kind of heavily involved in the blockchain crypto networks kind of space. And I would argue it's very difficult to test, right, a lot of the crypto ideas that we have, because we're still at the infrastructure stage, right? Would you say that? And crypto right now, there's still a lot of experiments. What I love about it is it's still very experimental, right? You're testing different, I don't know, consensus algorithms. You're testing a lot of, governance issues. You're testing a lot of, how to get developers on your public blockchain. I mean, just kind of talk about that. Talk about what did you see as the opportunity in public blockchains? What are the opportunities you see in this year 2021? Why are you a big believer in crypto and blockchain? Just kind of talk about that whole. What do you think about this whole space?
Yeah. So you mentioned that we still have some infrastructure problem. I agree that this is still a problem, but I think we already see very good solution to solve this type of problem. So back in 2017, 2018, at that time, I mean, the main blockchain with the supposed smart contract is Ethereum, and Ethereum was, I mean, Ethereum is great, but a lot of time it's somewhat slow and it's somewhat expensive. And so at that time, there's a lot of companies that invest resources into building a fast public blockchain. And Syndico is just one of the many companies that does that. And since then, in the last couple of years, we have developed a much faster blockchain that's about 400 times faster than Ethereum. And I think it actually, at least, it makes a huge progress towards solving the infrastructure problem. And right now, it actually enables a lot of new opportunity. And because right now, we actually already have a fast blockchain, you could actually build application for mass audience. Now, we still don't see that yet because it's still early, but because of this new technology and because of the infrastructure improvement, I actually think a lot of DeFi project is possible now, and that wasn't possible 2 years ago.
And is that what you're excited about moving forward this year?
Are yes, I'm very excited about this. And the other thing is I'm very excited about blockchain space because whenever there's a new technology, I always ask myself, hey, what does this enable that wasn't possible before? Okay. Now, I think one thing that's particularly important about blockchain is this smart contract technology. The fact that you could actually just describe the logic inside a smart contract and allow people who, as long as people believe in a smart contract, they could collaborate together. And I think this is huge. In a lot of time, people need to collaborate with each other, but people don't because they don't it's not like they don't trust each other, but they don't have prior experience. So they haven't established trust yet.
Can you give a very simple example of a smart contract that can only be done on a public blockchain that couldn't have been done before?
Okay.
Right.
So let's take a look at Uniswap. So Uniswap is a decentralized exchange. And this exchange basically allows people to trade different cryptocurrency with each other. I mean, you could trade a cryptocurrency on this exchange. And before blockchain technology, usually when you have to trade with different currency, it's very much centralized. Like you will go to a bank will have, let's say if you want to trade US dollar with euro, bank will have maintain some US dollar and some euro as liquidity and allow people to trade. But with Uniswap, it actually changed the business model, it changed the revenue model completely. What happened is that it's a smart contract and it allows anyone to come in and to provide the liquidity to allow exchange to happen. And people could just need to believe in this smart contract to collaborate together. And right now, what happened is that the contract will describe the rule of how people are sharing the revenue, sharing the profit, and how the liquidity is used. And it's basically allow everyone to come together to collaborate and to provide the liquidity to make it possible for people to exchange, let's say, Ethereum with a stable coin.
I see. So you mentioned the word, of course, DeFi, and that stands for decentralized finance. It's of course the opposite, or it's as opposed to centralized finance. Can you maybe talk about the difference between CeFi, centralized finance, and DeFi, decentralized finance?
Yeah, let's go back to the example I used earlier. So if we look at CeFi, it's like a bank. So when people are actually exchange money with the bank, people are first trusting the bank, and bank is providing all the liquidity, etc. And for DeFi, for Uniswap, we actually don't need to trust. So the liquidity, all the resources provided by all the individuals. It's people are pouring money together to provide this service to the other users. And this is fundamentally different compared to the centralized finance.
Sure.
People are trusting the smart contract. People are rather than trusting the bank. The liquidity comes from a lot of different individuals collaborating together rather than one central authority. Okay, what do you think is the difference?
I mean, centralized banks is just, it's traditional banks, right? And traditional banks, provide a lot of service like savings and, investment products. Of course, securing your assets, and payments and things of that nature. And I think the thing about centralized finance is I think it's clear to me people are more and more losing faith in it. And I think one of the biggest issues right now is like one is currency wars, between different currencies and different countries. I think number two is, I think there's a lot of distrust in governments and being able to handle inflation, right? And I think one of the biggest things right now is, just low interest rates, right? Nobody knows what's going on. Like, is the currency that the hard-earned currency that we've earned, is it becoming, less and less valuable through inflation? And there's less and less interest rates, right? And so, yeah, I think there's and then you see reports about governments printing more money, and and then you start thinking about, okay, what is money really backed by, right? It's not really, it's no longer backed by trust. I mean, it's no longer backed by gold anymore. And at the end of the day, what's guaranteeing the value of a particular currency? And at the end of the day, when you kind of, okay, it's backed up by lawyers, legal kind of is backed by the, at the end of the day, is backed up by the government, right? And that government is, of course, backed up by the military power, right? And so we talk about how at the end of the day, centralized currency is, at the end backed up by violence, right? And cryptocurrencies like Bitcoin and public blockchains, it really is just backed up by algorithms, right? It's this idea of miners and shared ledger, this whole idea of being backed by, I don't have to trust, a particular authority, and so it's minimizing kind of human error, so to speak, and it's minimizing a lot of middlemen. And I think just from a philosophical kind of religious perspective, I mean, I do believe in that. And so, although I just said that I'm not religious about an idea, I would say I'm pretty religious about the whole public blockchain space idea, and I would say that you are too, our belief in public blockchains, in crypto networks is somewhat religious. We don't have a lot of things to show for right now. We don't have a lot of users right now, but I would say the excitement around DeFi and the new things that we see are happening, I think we can imagine, like, yeah, tomorrow or next year or in the next 5 years, everybody will be in this, right? Like, one of the things for me as an investor, looking at just technology in general, is that if you really think about technology, it hasn't really disrupted that many industries, in my opinion. Like, yeah, you think about, Uber and Airbnb, sure, it disrupted, transportation, if you think about, of course, the big companies, Amazon, Google, Facebook, yeah, they disrupted retail, they disrupted, communications, media, right, entertainment. But a lot of the big kind of important industries like finance, right, banking, even real estate, healthcare, education, even governments, all of these big traditional industries just haven't been disrupted to the core yet, right? And I think crypto networks is the technology we've been waiting for that to happen, because now we're talking about the internet of value. Now we're talking about the first time we can, share, have non-fungible tokens or currencies or something of value that, because the core thing about the internet is when I send you something, right, any piece of software can be copied, right? And Bitcoin solved that double spending problem. When I send you a Bitcoin, I no longer have this Bitcoin, right? And you have it right now. And so now this exchange, the first time you could do exchange of value on the internet, in a safe manner without trusting both sides. And so I think that's just the beginning of, things of value that we see in the real world, whether it's a real estate certificate to currency to your healthcare, your health information, right? These are all very valuable things, pieces of data that need to be secured by, a blockchain, in cryptography. And so, those are kind of my high level kind of reasons I believe in crypto networks. And, I think that's why you and I are working a lot in experimenting a lot of DeFi and NFTs and stable coins. Maybe you should talk about like some of the things that you're excited about in this space, from NFTs to DeFi to stable coins.
Yeah, I'm particularly excited about DeFi. And one of the main reasons is, if you look at DeFi right now, or look at right now, there's actually a lot of opportunity in crypto that's generating fairly high return. Like, if you look at the various projects, if people are staking in stable coin, they often have 10+% return. And as you mentioned earlier, right now the interest rate is particularly low. So that right now, I mean, if we could just bridge this gap to give the mainstream people, the general public, access to this DeFi project, people could actually earn much more. And I feel like this is actually a very, very strong value proposition for the general public. Do you agree?
Yeah, for sure.
Yeah, so so maybe if we could just come up with something and something to bridge this gap, to allow normal people, to general public to invest in DeFi project or invest in stablecoin. I actually think there's a great opportunity here.
Yeah, I mean, that's one of the biggest opportunities right now. I think, one of the troubles we have in the crypto space is, it's easy to get a lot of crypto use. I don't want to say easy. It's much more accessible to get a lot of crypto users, right? And it's very, very difficult to communicate and educate and give access to, these crypto products to the masses, right? And there's it's inaccessible. There's a lot of fear. It's hard to get people on ramps into the crypto space, right? And so yeah, I think one of the biggest problems is how do we get the everyday user, whether it's cash or credit card, directly get them into the crypto landscape. I think that's one of the challenges ahead, and I think it does take public institutions and even public companies to start doing that, and market it in a way, in the marketing and reaching those crowds in a traditional sense, right? And so, although I'm very, very, of course, excited about the investments we made, like we're an investor in FTX, for example, or the Lightning Network, and it's doing really well and reaching very much the crypto crowd. But yeah, I think the challenge is, okay, the next step is how do we reach the average user, right? And I look forward to, and right now there's a lot of more public companies buying and holding more Bitcoin, and so it's getting a lot more attention. But I'd really like to see, a tech company, a well-known tech company, or just a public company just start, using traditional marketing methods and reaching the masses with a DeFi project, yeah.
Yeah, I totally agree with that. And I think, right now for crypto, I think it's way too difficult for the general public, most people to understand and most people to use. And if there is just a trusted public company and trusted institution to launch some DeFi project, I think it could really help bridge this gap, help to gain the trust of the general public to get much more involved into this industry.
Yeah. So maybe quickly, we have a few more minutes. Let's quickly talk about your thoughts on NFTs. Why NFTs are so hot right now.
So yeah, so this is another thing I think crypto enabled that wasn't possible before. Now you could have true digital ownership of an object, an item, a painting maybe, and that just wasn't possible before. Back in the day when you have, digital item or digital stuff, people could just easily copy and duplicate it. And with the blockchain technology, it's actually possible to uniquely identify a digital object. And so this technology just wasn't possible before. And that's why I think, NFT is going to be very powerful, because anytime I see that, there's some enabler or some new technology, I always think it comes with new opportunity.
Yeah. And maybe talk a little bit about stablecoins, and what are the opportunities in stablecoins now?
Yeah. So right now, there's actually a huge demand for stablecoin. If you look at just a lot of DeFi projects, by just staking stablecoin, you often have 10+% interest. And I think the reason is because when you have stablecoin in a crypto format, it could interact with all the other DeFi projects. And this wasn't possible with the fiat currency. For instance, one thing that I haven't talked about is that in crypto, I think it's more than just open source. It's more like open API. What I mean is that for all the projects, they could actually just use each other's data, and you could use each other's service directly. So for instance, right now, if let's say we have Uniswap to do exchange earlier, Now there's actually other crypto project where you could, stake in stablecoin and borrow out Bitcoin or vice versa. And you could imagine that there will be another project that just come out and just, combine these two services to allow people to buy on margin. And you could only do this with stablecoin, with crypto, but you couldn't do it with traditional finance.
I see. Thank you, Chris. It looks like we just ran out of time. I want to thank you. I want to thank Grace. I want to thank Startup Grind. Yeah, hope to see you soon again. Well, I'll see you very soon. But I hope to see the Startup Grind team again soon. Thank you.
Yeah, thanks. Thank you to the Startup Grind for organizing this. Thank you.